Several years now, the industry has been lobbying to allow perpetual futures, also known as Perps, to be traded on CFTC markets. And on Friday, the CFTC approved the first of such contracts by Kalshi. It's a perp contract on Bitcoin. So we'll go over that in a second. So the release mentions that it was approved pursuant to 40.3, which is the voluntary submission of new products for commission review and approval. There's two ways you can get a contract approved at the CFTC, and one is to ask for forgiveness, and one is to ask for permission. So if you are already trading contracts on, say, West Texas Intermediate, which is a type of oil, and then you want to trade contracts on Brent, which is a different type of oil, you might just self-certify and say, I think this complies with all the CFTC's rules, and I'm going to start trading it on X date unless the CFTC tells me otherwise. But when it's something new or novel, this is the more traditional way, which is to submit it to the CFTC for approval. And their economists, their lawyers, everyone takes a look at it and will provide you feedback on it so you can adjust it so that it measures the right thing. It's not susceptible to manipulation, other things like that. And then it's sort of pre approved. And that's the route that they took here. So perpetuals are actually easier to understand and easier to price than futures or options because with an option or a futures contract, you're dealing with delivery on a future date, which could be a year in advance. And then you have to deal with things like delta, which is the if $1 in price movement, how much would that affect the contract as opposed to the underlying physical? So if the underlying moves a dollar, if it's a long contract, the contract might only move 20 or 30 cents, but as it gets closer to expiration, there might be a movement of close to 1 to 1. And for perpetuals, that movement is pretty close to 1 to 1 the entire time. So you don't have to worry about delta. And because you are, and because that delta changes over time, the rate of change of that accelerates towards the end. And the rate of change of that and the amount of time you're paying for are things known as theta and gamma. And both those don't really exist. So, your three of the things that you'd have to price for in options, you don't have to think about with perps. So it makes them much easier and much more attractive to retail people, which is why the industry has been pushing to allow it for so long. Well, if it's so great, why haven't they approved it before? Well, because the futures contract contains the word future, right? So futures generally have certain characteristics, and one of them is the commodity that underlines it. Two is a reference price in the contract. There's usually leverage involved. And futurity, right? It has to take place in the future. So if something does not take place in the future, how is it a futures contract? And that's what is at the issue with perp contracts. So with perp contracts, they don't expire and they can be exercised at any time. So how does the funding rate work? Why isn't it just a spot contract? Well, because they're leveraged and you're not actually taking delivery of the price, you're just betting on the price movement. And because it's leveraged, somebody is either fronting the money or guaranteeing that movement. And there is a cost associated with that. And the amount that they are willing to charge you will vary depending on how much it's deviating from the price of the underlying. So when it deviates a lot, they'll probably charge you more. And when it deviates less, they'll charge you less. And that will drive the price of the perp to align itself with the price of the underlying. So that's the mechanism for price discovery rather than eventual delivery at the end, which is how the price conversions usually occurs in a futures contract. But you still have the question of futurity, right? Can you have a futures contract without futurity, if futures in the name? And in the case law that goes over this, futurity is one of the elements, along with leverage, a reference price, a commodity, etc. So the question is futurity a necessary element, or is it just one of many things that are considered but are not required? And the CFTC in this release seems to have taken the position that it is not required and it's just one of the things to consider. So it's not explicitly stated in this release, but one of the ways I would characterize it is what if futurity means having future executory payment obligations and not necessarily a fixed end date? Maybe that's a way to define futurity, which is not defined in the statute. It's just a product of the case law. And that seems to be the approach the CFTC has taken. So a futures contract is not defined in the statute, but it just says in the statute that it's a contract for future delivery as opposed to deferred delivery. So a deferred delivery would be something like a forward contract where both parties are intending to make or take delivery of the underlying, let's say it's an oil contract. And future delivery means that they are betting on the price of the future commodity, but future delivery of the commodity, but they are not necessarily intending to make and take delivery, although it is possible. And that possibility of future delivery is what creates the price convergence at the end. So it's a very interesting development. They did drop a footnote at the end, which they mentioned that the CFTC does, that they think that crypto is specifically well suited for this because there is already 24-hour trading of crypto. And so the 24-hour nature of perpetual futures seems okay with them. But that it would not be something that is appropriate for something like ag products, agricultural, precious metals, or equities, and that's because they are not traded on a 24-hour basis. They are not as liquid, and so they don't think that those types of contracts would be well suited for perpetual futures, but for cryptocurrencies and things like that, which are already actively traded 24 hours a day worldwide. And perpetuals are very popular overseas. They want to open that up for the US markets. So that's my thought on that. Let me know what you guys think of this and like and subscribe so you'll see future videos like this and leave questions in the comment sections and I'll try to address them. Have a great day, everyone.